Let's talk a little bit more about the rising copper prices, what the outlook is when it comes to steel, and whether or not we can see a consolidation in prices. Amit Dixit is joining in from ICICI Securities. Good to have you on board. Just wanted to get in a sense from you as to how you're looking at the overall steel prices as well. Do you think that now there's a strong case for a decline in prices given the fall that we've seen in iron ore prices?
Yeah, hi, good morning. So, if you look at from Indian perspective, steel prices were declining through this quarter, something which is very unseasonal because this is a seasonally strong quarter. Having said that, we were having a very peculiar case where spreads were contracting because on one hand steel prices were declining, on the other you had that iron ore prices remained firm. Now, while global iron ore prices have cooled off, but in India, still we don't see NMDC taking a price cut, and export prices are still at a premium. The landed cost of imports, that is, they are still at a premium. So, while if the steel prices are under pressure, you could see that iron ore prices can also be under pressure potentially. Having said that, we will have to see what NMDC decides to do in the month of April. Although in Odisha, we have heard of instances where discounts have been offered on iron ore. So, therefore, we could see actually some marginal cut in April, but it could be very marginal, unlike the rest of the world.
Enough. And what about steel stocks then? They have been on the rise of late. What's the outlook on how you're looking at this rally sustaining down the line for the long haul?
Yeah, so yesterday all the steel stocks rose because of the positive news from China that the industrial data and the various manufacturing related data came ahead of expectations. Now, this is not very uncommon in China after Chinese New Year. You see that data points are typically quite sanguine, and this year is no different. Having said that, April to June is the peak construction activity in China, where demand is quite good, and therefore, the seasonal uptick in demand might see some rebound in the steel stocks everywhere, not just in India. So, steel stocks that had been languishing for a while because of global iron ore prices correcting, the uncertainty around China suddenly found a shot in the arm yesterday. Now, this rally can only sustain if we see the sustainable increase in the industrial production, in the industrial activity in China. I think that is something that one needs to be watchful of. There have been stimulus measures in the past, but personally speaking, I am not too bullish on those stimulus measures, at least in China, because we have seen them fading out very soon.
Amit, where is the China factor for metals?
Sorry,
The,
China
the
factor for.
China factor, because steel is a function of China, China is a function of demand. We don't know where China is headed. And barring a swing move from China, can things really move for the metal sector?
No, so if you're talking about metal sector in India, I mean particularly steel, what we have seen in the recent times that, and we have been seeing this actually for last 1.5 years post COVID to be more precise, that steel has become a very local industry in India. If you look at it, the demand is growing, and we have seen that it is for the first time I'm seeing in last 20 years of covering this sector that we are going to see 3 years of double digit growth if you include FY24. So therefore, the consumption in India is on rise. We have our own players who are increasing capacity, and consumption will be on rise because in India we expect that consumption will double from FY23 levels by FY32. So essentially, we are talking about a growth of roughly 7.5-8% for many years to come. So I am quite bullish on steel space in India. Now, see, nothing worse could have happened as far as China is concerned. In January, in December, particularly in the Q3 of this year, we saw Chinese imports hitting Indian shores, and India turned net importer of steel in November and December. But all this changed actually, if you look at it in January and February, when we started exporting and we turned net exporters once again. So I believe in India, the overall sentiments are quite bullish, while spreads will not be as high as they were in the past, but because of the volume growth, we would see steel companies doing well.
Okay, fair enough. Just let's get in a take from you then as well, Amit, as to how you're looking at NMDC in particular. Given the fact that we have seen the fine prices at a significant premium to the export parity, is there some sort of a sharp cut on the cards?
No, so in case of NMDC, as I mentioned, that even NMDC's prices as of now, they are at a discount. In fact, if you look at landed cost of imports, NMDC's price, okay, earlier they were at a discount of 50%, now they are at a discount of roughly 30% compared to landed cost of imports. So the discount factor is still there. And therefore, I don't really see NMDC cutting prices because globally prices have corrected. See, in India, technically speaking, when imports of iron ore are there, then you will see that prices fluctuate according to whatever is happening around the world. However, what we are seeing that in domestic market there is a slight surplus of iron ore, particularly in Odisha. In Odisha, we have seen people cutting prices, so that would play a major role. Also, what would play a major role is that your in China the pellet prices have corrected, export pellet prices. So basically, this pellet DRI chain is finding some price crunch, and that would flow into NMDC prices rather than something what is happening in rest of the world, because India, as I have been mentioning very often, is the only country in the world that both produces and consumes iron ore. So our supply chain is very internal rather than being external.
Okay, Amit, great to have you on the show. Thank you so much for taking the time out and joining in today.
Thank you.
If you like this video, then like, share and subscribe to ET Now.